Hello traders, this is Dr. Zain Agha. Today I'm going to show you how to trade gold. So first you have a daily chart here, and look, where is the trend going? The trend is going up. Now let's change the chart to weekly and then to monthly. Now this is the monthly chart that you can see for so many months the market is going up. It came down and just started going back up. So how far can it go? It can go up to here. So that was about 2071.22. The price is going to be about 2071.22 pence. Okay, so now we have made up our mind that we are going to trade gold long. So for the whole month, gold has been going up. Let's go to weekly chart. Now this is the weekly chart, and you can see for so many weeks it came up, came back down, and then started going back up. Now we're going to go down to daily chart. Now this is the daily chart. Now what we're going to do, we're going to plot a moving average which will be 200 period, 200 exponential, and give it a yellow color and make it a bit thick, and then color it. Okay, now this, when the 200 moving average is below the candles, that means the market is trending up. In other words, when the candles are above the 200 period moving average, that means the market is trending up and we should go long only. Now, to find out about when the uptrend started, and we're going to put in one more moving average, which is the period 20, and give it a color, and a different color. Okay, let's give it lime color. Right, there it is. Okay, now let's go back and find out since when the market has started going up. You can go back and see here, see, and let's see here, there it is. Now you can see the 20 period moving average has crossed the 200 period moving average and the market has started going up. Let's have a look at the date. It was the 24th of December 2018. Exactly 2 years the market started going up. Now we will put in an indicator which will give us an arrow telling us that the market trend has changed to up or to down. Now this is called the moving average crossover, and we change input here. Fast period we put in 20 because this moving average in green color is 20 period, and in the yellow one is 200 period. Now whenever they cross over, we will get an arrow. Now look here. Okay, color the green and red. See, okay. Now see, you got the green color here telling you the trend has started going up now. So you can be rest assured that you're going to trade only in the direction of the trend. So now this is a daily chart. Now if we put in a line here that we buy at the close of the candle and open up the new candle, so that must be the weekend. So anyway, and we bought it at 12 68.95. Now let's stay in the trade until we find a signal to go short. You see, so many months, for 2 years, the market is going up and up and up, up and down and up and down, and it's still up. We have not crossed yet. The market was about to go down, but the signal, the crossover did not take place. Okay, supposing you exit here, because now the market has gone down below the 200 period moving average. That means the trend is down. Okay, let's see if we get out here. Supposing we get out at the close of this candle, then let's see how much profit we have made here. So this was our entry 2 years ago, and this is now today, and this is 5,191 points, 519.12 points. Now each point is $10, so this could be $51,000. Anyway, so nobody is going to wait for 2 years to stay in the trade. Now let's go back and have a look what we can do. Here is the daily gold chart, and I have plotted my Z-Vena MACD. So this is the Z-Vena MACD, which has the lines as well as the histogram bars, and they are going to help us trade the instrument with profits. Okay, so let's start from here. We got the crossover and we got the buy signal here. Let's put a line on this arrow. Look below. Let's change the color of the vertical line into yellow so that it's easily visible on the black background. Now we got the signal here to go long, and the histogram is also telling us the market is in an uptrend. You go long. So we will go long at the open of the next candle, the next day, this one, and we will stay in the market. And where are we going to get exit? Now this is where the Z-Vena MACD is going to help you. Whenever you see the crossover or the change of color, that is the point that you should get out. So let's put a vertical line on it and see what is it telling us where to get out. Now you see the signal. This is telling you to get out. So you get out here at the close of this next candle, which is about here, and you get a profit of about 52 points, 5.2 points or 0.52 points. And then the next trade, now let's get rid of the lines. Now because you have the 200 period moving average is up, as well as the 20 period moving average is up, that's giving us a buy trend, buy signal. So the trend is trending, the market is trending up. So now we're going to take only buy trades. Now let's go to the next candle. We see this candle has closed above the 20 period moving average, so we need to buy again. So we go here and we buy at the open of this new candle, and we place a stop loss I forgot to tell you where to place the stop loss. You place the stop loss below the last low, a few pips below, about say 5 pips below the last low. And then we continue and looking at the where the market is going, and we also keep an eye on the MACD, so where the MACD is going to cross over. So we are in the trade, and as soon as the market goes below the 20 period moving average, that's where we are also getting the signal, the crossover signal. So this is where we will close our trade. So let's see how much it is. So we exit here and we make a profit of about 39.40, about 40 something like that, 40 points. 40 points, that's about $400. And then we continue. The MACD is going down, but we are going to go long only. We are not going to go short at all. As long as the market is above the 200 period moving average and above the 20 period moving average. Now we got out here. Now we're waiting for the next trade. To take the next trade, you move your here and keep looking down as well, and you see, either if you wish, now the market went above the 20 period moving average. If you wish, you can buy here at the open of the new candle, this one. Place your stop loss here, place your stop loss here, and then you continue until you see the crossover to exit. Let's bring this line here, carry on, you're up here, but here is still green line. Now you got the red here and the next red here. Okay, so you will exit here. So this is going to be you close your trade here. So this will give you about another 21 points. Now the market is now, the histogram is showing you the market is going down, but don't worry. We just use it to exit our trade. We do not take any signal from it, just confirmation. Now we're going down and we want to go up again, and then we see here this market has gone up, has crossed the 20 period moving average and it's gone up. So we are going to open a trade here on this candle at 57.20, and we will wait until we get the exit signal. So the market is going up. As long as it's above the 20 period moving average, we are not worried. And then it starts coming back down here below the 20 period moving average. You can get down out here, or if you are following this, you can exit different points. You have one point is here to exit at this point. So if you exit here, you make a profit of 62.6 points. Or if you exit at this point here, then you get your profit is going to be about 83 points. And then you go again. Now it has started giving you a sell signal, but still the 20 period, the 200 period moving average is up, so we're not going to go short. we will stay long, and then we see another crossover. It goes above, so we will buy here again, buy at the open of the next candle, which is this red candle. Place a stop loss somewhere here, a few pips below the last low, and then we are still in the trade, and the market keeps going up and up, and then we see the red candle. The red candle is about to come down, but there is no signal to get out. We stay in the market, and then on this red candle is giving us an exit signal here, so we can get out here. If we get out here, we make about 3.5 points, and if we do not, then we will continue going up, and yeah, but this is the signal to get out anyway. At the crossover of this, you will get out here. Okay, so which was our entry was here. Yeah, so we will be getting out here, and so we'll getting only about, as I said, 3.5 pips or something like that. And next we wait for the next signal. Next signal is here. This is gone above the 20 level, and then we have another one. This one is giving us a buy signal, buy here at the open of a new candle here, this one, and we stay in the market until we see another. Let me bring a line here. We see another red candle here, and we see another is going below it, and before that you see an exit signal here. So you go here and you close your trade here, and you get a profit of 61 points. So you go continue like that. So this is on the daily candle. Let's move on to the 4-hourly. This is the crossover. We start with the crossover. So we place a line here. This is the crossover. The market is trending up, so we buy here at the open of a new candle here, and we place a stop loss below the low, last low. So this is the last low, a few pips below this, and we continue looking for our exit, and we do one thing here. We bring our, we look at this, we can see the crossover of the MACD, so we will close our trade here at this level. Okay, so in that case your profit is about 7 points, and if you can do one more thing, like I normally do, is measure what you are risking. This is your entry, this is your stop loss. So you are risking about 13.6 points. Let me say 14 points. So if you look for the 14 points, you will get your 14 points here. Okay, so you can do that way also. Okay, now let's see where is the next signal. The next signal we get is here, when the candle crosses the 20 period moving average. So we go long here at this point, at 40.68, and we put our stop loss here below the last low, a few pips below the last low. And if you want to see risk to reward ratio is 7.3, you will get it here, but we are going to wait to see the signal to exit. So this is coming below the 20 period moving average, and you also got a cross here, so you will get out here. So almost you will close almost at break even, or just a few pips only about. Then the next one, we get it here. This is another buy signal at the open of this candle, and your stop loss going to be a few pips below. And if you calculate, your risk is 9.3, so you're going to get your 9.3 on this candle. Okay, otherwise you will wait until the it closes here. Okay, now here you get another signal. This is crossing the 20 period moving average, this one. So we will buy here at the open of the new candle, which is this one, and we will continue. It's a very, very big trend going on, and we will bring our to here to crossover, and we are going to get our profit here at 32 points, 32.1 points. So this is how you're going to trade gold. It's not that difficult. It's very, very easy. I'm going to give you this indicator for free. Now please make sure that when you click to download the indicator, you will also receive an email. Go to your email, and there it will ask you to give us permission to send you emails. Please subscribe to it and click OK. Click on that link. Then whenever I'm going to put in a new video, you will be informed by YouTube, as well as I will be sending emails to all of our list members. So wish you all the best. Have a nice happy new year. I hope you had a good Christmas this year, and a few days left now for the new year. So have a nice happy new year, and do trade the system from time to time and make good money. Take care. Thank you. Bye-bye.